Hey, what's up? What's up? What's up? How y'all doing out there? Live from Final Four on Monday. Yeah, the Houston Cougars, we made it, y'all. We made it to the championship game. Yeah, we made it. So we are able to go live on Monday. Try to see what this market gonna give us, and get ready for the game. I will be going live because I'm gonna head over there probably about 3 o'clock. That way we be ready to rock and roll over there. We got 2 minutes before this market open. How y'all doing out there? How y'all doing? Appreciate you for joining me. I'm your host, the one and only Stock Sniper. And we wait to get to this opening bell this morning. We got less than 2 minutes remaining before this market open. Got really, really good internet connection too. So we ready to rock and roll. You ready to rock and roll? Yeah, that was a good game, man, that U of H did. Pulled it out and beat Duke. We pulled it out and we beat Duke. So we ready to rock and roll. Yeah, we ready to go. We ready to go. All right, 1 minute left before this market open. Appreciate you for joining me. Let's see how much further this market gonna go down. Guess what? Man, another sell-off. Global market. Everybody's feeling this all over the world. Everybody's feeling this. The U.S. stock market, what I try to tell y'all, man, the U.S. stock market runs the world. If the U.S. stock market crashes, everything else is going to crash. Everything else is going to crash, and that's what's happening. Everything else is going to fail. So, buckle up. I'm trying to see which direction we're going to go. We got 9 seconds left. I don't even want to trade that. Yeah, no. All right, market is open. Yeah, y'all hit, well, I don't know if you heard it, but every morning when the market opens, the people in the market clap and be excited. They ain't sound too excited this morning. And there it goes, opening bell. They ain't sound too excited this morning, guys. Let's see what's gonna happen. Boy, these contracts are expensive. Let's see. I'm trying to get my contracts loaded. Of course, we're shorting the market, but these contracts are expensive. Yes, they are. As we're watching the S&P 500, we are down almost 7% on NVDA, 3.5%, 7%, 2%. Man, this market dumped overnight, guys. The market dumped overnight, big time. The whole world, every stock market in the world is crashing. But we're trying to see if we're gonna get a circuit break. What a circuit break is when they set down the whole market because it's too much. There's too many people selling, right? That it triggers what they call a circuit breaker. Well, once it's triggered, the algorithm of the stock market has to catch up with the volume, if that makes sense. So we're gonna see if we're gonna be a circuit breaker. The last circuit breaker we had was during COVID. And this drop right here is way worse than what happened for COVID. Appreciate y'all for joining me. Everybody that's in here, it is Money Monday, and this market is crashing. The whole world, not just the U.S. stock market, but the Asian market, which is the Chinese. Every market in the world is crashing. How America goes and how China goes is how the rest of the world goes. That's how it works, guys. ATM Tim, hey, what's up, ATM Tim? How you doing? That's how it works, guys. The American market is number one, the number one economy. How America goes is how the rest of the world goes. So once China and Asia start selling off, the rest of the world, don't listen to what nobody's saying on this internet that it's just America. It's not, guys. It's everybody that's feeling this pain. Everybody. So just be mindful of that. Just understand and watch what's going on and adjust for you and your family. So we're watching to see how this market gonna do today. Of course, it's dumping. But these contracts are so expensive because everybody knows to take a short. So a lot of people see it's not that much volume as usual. Usual, guys, the first 3 or 4 minutes of the market, it's a lot of volume that usually goes on, but not right now. Not right now. People are basically watching to see what's going to happen. China had a big sell-off. Asia had a big sell-off last night because our stock market is open, but at night, that's when they market open because of the time difference. So overnight is when the Asian and Chinese market is open. They had a big sell-off. Big sell-off. So now our market is open, and I think theirs are getting ready to close. So that's what's going on. But it's not that much volume. People are just sitting and waiting to see what's gonna happen. We got a low of right around 484. That's support right there. I think I'm about to just go enter the position on the short side and just go really small and see what it's working with. Let's see. Oh man, these not even really moving. Why you gotta be very, very careful, guys. Because we know how it can be. You gotta be very, very careful. Very careful. But the good news is we got good prices on these companies that's buying at a super, super discount. Look at NVIDIA, super discount, guys. Under $90 on NVIDIA. Tesla, super discounted 220. Microsoft, 350. Facebook, 487. AMD is under $80, guys. Amazon is 165. Long-term investment, man, it's a great time to start investing because all these companies are on a discount. Walmart is under $80. It's a good time to go in there and catch some of these companies at a discount and hold it for the long haul. But day trading, it kind of sucks right now. Trying to find, of course, it's the short. That is the actual play. These spreads are so heavy. I appreciate y'all for joining. Appreciate you for rocking with me. We are just crushed. Man, we just broke support. I'm just trying to see which way this market is going. Bear with me, guys. We are at the support. We're still hanging around support. I don't think we're going to even get back up here to the resistance. We're not even going to get back up there. I really don't think so. I think we'll continue to drop. Let's see. Still selling off. Wow. For 482.75. Yeah, they'll eventually go back up. But the good news is money is made when the market goes down too. That's the good news. That's the good news, ATM Tim. You can make money on it even if it goes down, like right now. That's the thing they don't want nobody to know, that you can make money on the market if it goes up or if it goes down. So there's a lot of money being made right now. A lot. Because you can short the market all the way down. This whole dump, look how ugly this looks. We get back to, okay, let me look. I'm trying to take it back to the pandemic. This sell-off is way worse than the pandemic, guys. This the pandemic right here. This is before the pandemic numbers. That's 2020. This drop was because of the tariffs, not the tariffs, the inflation. Back in 2021 when I made that video, and then we recovered from that. It took 3 years to recover from the inflation news back in 2021, if y'all remember, when everybody was talking about the dollar gonna go to zero and all this here. That was in 2021. It took us 3 years to recover, right? Then we went up to all-time highs. Now they try to scare everybody again. They try to scare everybody again. Now this drop is almost at pre-inflation highs. This line right here is inflation highs. We're almost there. In other words, the stock market is on the wholesale. The stock market is on the wholesale. We're getting some great prices on these companies that we know, like, and trust. NVDA is at $88 right now, guys. Tesla, $217. Facebook, $480. Amazon, $166. Apple, where's Apple? Let me get it. No, Apple is down here. Apple is $177. Google, shout out to YouTube, It's under 150. We got good wholesale on these companies, guys. Let it go down. Let it keep falling. Let it keep falling. Just able to buy more at a wholesale for long-term investment. Just let it keep falling. That's why it's so, man, that's why it's so awesome to know how to play this day trading game. This is literally all you have to know is the ATM machine. This is legal bank robbing that's happening right now. This is literally legal bank robbing. Now we on the dump. We on the okay, we got some buyers coming in now. This is literally legal bank robbing, bro. But of course, you got to know how to play the game. You got to learn how to play the game. You got to understand. Once you know how to play this game, once you know the ATM code, that's the thing about the stock market. Once you learn the passcode to this ATM machine, which I call the stock market, is unlimited access to income. You got to know how to play the game, because the average person don't understand that. Okay, once he say tariffs, we already know what to do. We short it all the way down. We already know how to do that. Appreciate y'all for joining me. I'm live. I'm day trading. I'm enjoying my time. Guess where I'm at, guys? I'm at the Final Four. Go Cougs. University of Houston Cougars beat Duke on Saturday, and now we are in the championship game against Florida. I'm live at the Final Four, guys. You know what I'm saying? I'm live at the Final Four, trading stocks, trading this market going down. I'm just sitting back watching it go down. That's all I'm doing, guys. Live at the Final Four. Now, we are coming up to resistance. I didn't think we was going to make it up here, but we did. But we did. We back up to resistance. We're trying to see how it's going to work. Well, I'm on the wrong thing. I'm on the wrong company. Okay, here we go. I'm back on the overall S&P 500. 481.80 is the support. I'm waiting on it to get back up to here. Come on up. We got one touch, two touch, three touch, 4, 5, 6, 7, 8, 9 touches. This 448, 500 area is really, really strong resistance. Bro, I haven't said 500 on S&P 500 since 2022, 2023. Let me go back and look. Let me go back and look. I haven't said. No, hold up, guys. I haven't said. Yeah, I haven't said that. 500 in almost 2 years. Yeah, come on, push it on up. Go on up here. Rejection, 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 rejection. That is strong resistance right there. Okay, that's pre-market rejection right here. Resistance right there, right around 497, 498 to 500 area. Still looking good though, guys. But this market is crashing. It's like the best thing right now, the way this market is right now, this will make a rookie look like a pro. Because you already know what to do. Short it all the way down. That's it. But you got to take your profits when you got them. Good time to go snake skin Randy style though. You know. So we waiting to see, can we get up here to this resistance? Let's see. We got support. We got resistance. Heavy, heavy, heavy resistance right here. Check out NVDA. Big run to the upside. Resistance on NVIDIA is right there. Right there. There's resistance on NVIDIA. Got to be careful though, especially if you buying if you day trading, you got to be very, very careful. You got to take profits. You got them. If you day trading, you got to take your profits when you got them, bro, and you got to cut your losses quickly because this thing can turn around in any given second. The thing is, can they push it up to this resistance line? That's what we're waiting to see right now. Got to be real, real careful. If you took that bounce, you got to be taking profits. This thing can turn around real, real easily. But if you got in down here, you snake skin Randy, like what I'm doing on the puts, what I'm doing on the shorts, snake skin Randy, that's what I'm doing on the shorts. why I'm just sitting back. I've been holding the short since Thursday. So I'm just sitting back. Yep, I've been holding the short since Thursday. I took a short right here on Thursday. I'm just sitting back, watching the market go down. It's it's really good when you get in on these shorts right here or up here, because then that big old drop we had Friday from China putting on tariffs on America, that crushed the market. So that was a good call I made on those shorts on Thursday evening. I pulled the trigger on the short, and I'm still holding it. I'm still holding that short. All right, we almost up here to the 500. Gonna see what's gonna happen once we get to this resistance line right here. See, that's the good thing about that short that I'm in. That China bad, that news that China is putting 34% more tariffs on the US, that made the stock market go even further down right here. Right here. And then, that Friday. And then we just totally dumped on Friday. Went from here all the way down here. And then the China market dumped. Like I tell y'all, whatever the America basically runs this world. Whatever happens in America, guys, it just goes all the way down. It's like they say that the tariffs and the inflation hurt Americans. Don't get it twisted, guys. It hurts everybody in the world, especially the poor countries. So this trade back and forth that they're doing is hurting everybody in the world. See, that's the thing about we up there. See what's going to happen. All right. Good play on that drop. Another, see, I was just talking about this resistance, and we got another resistance break. Another resistance drop. Take your profits when you got them. On the day trade side, are we below the 9 EMA? Yes. What a rejection. Come on. Come on. Keep on selling off. On this quick day trade, 15% on that trade. And still holding. I'm still holding on to my swing trade that I took on Thursday. On that day trade right there, we got 15% out of that. All I did was play the game how it's supposed to be played. I waited, waiting for it to get back up here to the resistance. I seen resistance, rejection, 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 rejection. Once we got up under the resistance, I pulled the trigger. My stop loss was at 498.50. But once I jumped in, we got rejected, right? Perfect trade right there on the day trading side. 14% on that trade. Great trade. I didn't go in heavy, right? I didn't go in large. I didn't go in heavy. I went in moderate, right? And I just pulled the trigger. Take your profits when you got them. Just like that. 30 minutes in the market, holding on to one swing trade, right? And then this day trade just pulled it off 14% on that day trade. Out here at the final four. One trade so far, 14%. But I'm still holding on to my swing trade. I'm still holding on to that swing trade. And it's up 250% right now. So it's going down. It's going down. All right, we hit it right back up to the same resistance line. Let's see what's going to happen this time. Let's see what's going to happen this time, guys. We're back up here at that resistance line again. Let's see what's going to happen. Will we get another rejection? We right back at that resistance line right here. Go 95.72. Well, you might stock sniper. How long you gonna hold that swing trade? First of all, is that contract is for is a month out, right? And it's already up 200% right now. So that's why I'm not really worried about it. And I ain't talking about it that much. It's because I'm already way up. And as long as they keep talking about tariffs, we're going to continue to see downside. So to be honest with you, I'm waiting 2-3 more days. I've been holding on to this contract since Thursday. Well, when what made it go up 150% was that China said, okay, you put tariffs on me, I'm going to turn around and put tariffs back on you, which China did that Friday, 34% tariffs on the U.S. And then that's what put me up 150%. Now I'm just snake skin Randy. They keep on talking about tariffs. Guess what I'm going to do? I'm going to continue to hold. I don't have to worry about it to the end of this week. Long as we keep going down, I'm going to keep holding. But depending on what happened today, when I wake up in the morning after the game tonight, it's going to tell me what I'm going to do tomorrow, Tuesday morning, about this time. So if we get another big sell-off, right? If we go below the low of the day right here, if we start dropping below 481.80, I will hold it, right? But if we move up and we get back up to and I'll be surprised if that happens, guys. Around 505. So my take profits is right around 100%. So I'm gonna hold this. If my take profits is 100%, I'm up 200% right now. So long as we continue to go down, I'm gonna continue to hold. But if we go up, if we break this 500 and start getting to 502, 503, 505, then I'm gonna pay attention to it because I'm not gonna go below 100%. So right now I'm good right now. I'm good right now because we had another big sell-off overnight. So I'm good right now. But we broke the support. We broke the resistance line. We're back over 500 now, guys. Back over. We broke it. We at 502. So we keep going up. My take profits is 100% on that other. Yeah, we is moving now, guys. It's moving now, guys. $507 is eating up my 200% real fast. Really, really fast. So I'm out of that position. 100%. I was up as much as 300% on that swing trade, but it just got eaten all the way up. And like I said, I was going to take profits at 100, and that's what happened. So I'm out of that trade from Thursday, guys. That swing trade, I got out with 100%. So I doubled 100% on that trade, that swing trade that I held since Thursday. 509.31. Now the stock market is green, guys. Dang, this sucker is moving, bro. Everything is green now. Boy, everybody. Tripped out. The heck? I took that short again. I didn't mean to do that, but I did. And boy, Woo! Let's go. Boom, another 29% on that news. Another 29% to the upside on that news. Bro, man, what a day. Another 29% on that news. Another 29% on that news that just came in. Woo! Another 29%, 29%, 14%, 100%. Bro, 143% on the day. Woo-hoo-hoo! Just like that. We wrote it down and it rolled it right back up. Home run. A home run. Bro, a home run. What a day. Shout out to the stock market. Shout out to the stock market. Another day. We wrote it down and then we wrote it right back up, guys. We wrote it down and then we wrote it right back up. What a day. What a day in the US stock market, bro. What a day. What a day. You see? That's why I told y'all, bro, you have to be careful. Just like that, Donald Trump switched. He switched. Just like that, he switched, y'all. Just like that, he switched. That's why the big turnaround. Trump say, I'm pausing all tariffs on all countries except China. Bro, that Donald Trump a thrown individual, man. Let's see what's going to happen. Trump is considering a 90-day pause in tariffs for all countries except China. Wow. What a day. What a day in this stock market. We're going to see what's going to happen on this day. What a great day. All I need now is for U of H to win this championship game tonight. What a day. 143% on the day today. What a great day. 143% total on the day. What a day. On my day trade, 29%, 14%. My swing trade was 100%. 2 day trades today. 14% to the downside. 29% to the upside on the news that the rumor is that Trump is going to pause tariffs on all countries except China. That's why the big move up on the stock market. Bro, what a move. And we caught it. And we caught it, guys. Great day in the stock market. 2-day trades. 43%. What a great day. So now what we do, guys, we just hold on. Just wait, because we don't know what's about to happen. You know what I'm saying? We don't know what's about to be said next. You know, all it takes is another tweet from Trump saying the opposite of what he just said. So you see, all this volume came in when the announcement came out that Trump said that he's going to pause all tariffs except on China. Just like that, he changed the market. So we're going to see if he's going to come out and announce that himself. As of right now, that was just a rumor, right? That news that just came out that Trump said that he's going to pause all tariffs on all countries except China. So now we're waiting for clarification that that's the truth. So we're going to see. Breaking news, breaking news. So they're saying they didn't hear it. That's just basically rumors. That's why it's another sell-off, guys. It was just a rumor. But the good news is, if you caught that like I just caught it, congratulations. Even though it was just a rumor, the market really loved that rumor, and I got in right when it happened for another 29%. But they're waiting. I'm waiting. Everybody's waiting, guys, for Trump to either deny this or go on and put it out there that that's the truth. That's what we're waiting on now, guys. Will Trump tweet 90-day pause on all tariffs except China? So that's what's going on right now. We're waiting to see if that's really true. That Trump is going to pause all tariffs on everybody except China. Wild morning, bro. Wild Money Monday. Wow. Wow. We're going to see if this is true. I'm just holding out right now. Just waiting. We're just waiting, guys. Man, that's why it's so important you know how to play this game, bro. Y'all got to learn how to play this, bro. Like for real. I'm out here at the Final Four, you know, pulling money out of thin air. I know the ATM. I have the code. I have the PIN code to this ATM machine, which is the stock market. I got the pin code, bro. I got the pin code. It's 9:30. What a wild day in the market. Wild morning, bro. 1 hour in on my 2-day trade. A 29%er and a 14%er for a total of 43%. And then I had one swing trade that I had been holding since Thursday. 100% on that. I got it. I bought that swing trade Thursday right before the market closed. I held it all Friday, and I just got off of it today for 100% on the short side. And then on a day trade, we just waited. The 1 touch, the 2 touch, the 3 touch of the resistance, and caught this another touch, and rolled this down for another 14%. And then we broke that 097 right when that news came out that Trump's supposed to be pausing tariffs. And right when we broke this, we ran it all the way up for another 29%. Wow. And we are considering taking another short if we break this support line. Old resistance turns into new support. Resistance is right here. Let's see what's going to happen. We got to be very, very careful, guys, because Trump can come out and say anything right now. Whatever news that has anything to do with tariffs, positive or negative, can affect this market. That's why you got to take your profits when you got them. Unless you get in right whenever the tweet or the news come out and you're in the right direction. So that's the only thing. On this trade to the upside, when I caught all this, just so happens I was in right when the news broke of he's going to pause all tariffs on all countries except China. But they're saying that is a rumor that has not been fixed in stone yet. So that's why the big sell-off to the downside, because it was just a rumor. Well, of course, you buy the rumor, sell the news. But in this case, that was just a rumor. Now we're back up under the resistance right here. Yeah, I think we're just gonna watch it right now, guys. Until it's time for me to head over to the Final Four. I'm gonna go over there to the Final Four kind of early, probably at about, well, shoot, I'm gonna go about 3:00, maybe. That way, I'll be there from 3:00 all the way to the game over. I'm gonna go to the fan experience. Yeah, I'm gonna go kick it today. I'm gonna go live, y'all. So hope y'all come in here and kick it with me while we are at this Final Four. What a great weekend, guys. What a great weekend. And all I need is for U of H to win tonight. That's all we need, guys. to close the deal. See what's gonna happen. 1 hour in on the stock market, and we ready to rock and roll. We bounced off that old resistance, and we back over 500, guys. NVDA got over 100 on that news, and NVIDIA is green.
While you're here, Dan, let me just take a quick break and get to Eamon Javers in D.C. again. Eamon? Spoke to Caroline Leavitt, the White House press secretary, on the phone just a short time ago. She tells me it is quote unquote fake news that the White House is considering a 90-day pause. So the White House.
That was fake news, guys.
Wherever it came from.
That's crazy.
Considering a 90-day pause on tariffs, saying the president is committed to his tariff regime, and any reports that he's considering
that was fake news.
A 90-day pause are quote fake news. That from the White House press secretary on the record just a short time ago to me on the cell phone here as we try to sort through where this came from and why it is the market became convinced that might be a possibility. The White House saying it is not a possibility.
So, I mean, we're at this weird standoff then, it feels like, between the markets and the president. It's like this weird game of chicken, right? Of who's going to blink. And clearly exactly the White House is not blinking.
White House is not blinking. Clearly the market wants the White House to blink. That's why you saw that jump on this kind of a speculative thing about what somebody might have said. But clearly the White House is not blinking. All the speakers from the White House, whether it's the Commerce Secretary, Treasury Secretary, Trade Advisor, the President himself in social media posts, all indicating
that was fake news.
To this tariff agenda and is not backing off despite the.
So you know what that means, right? This market about to go back green. It's going to start back going red again.
One of the things we're going to have to figure out is sort of where this
it was fake news.
Social media and how it moved the market.
The pausing of tariffs on everybody except China, that was fake news, guys. It wasn't true.
White House's perspective. If you look at
that's why we're seeing this downside.
It seems to indicate that he didn't say.
He didn't say that.
So, was something lost in translation here, or were some?
What a wild day!
Sort of deliberate games on social media to try.
That's wild.
The market clearly moved on something, guys.
That's why you got to be very careful. You know what I'm saying? When these type of things happen, you have to be paying attention to what's going on.
I think the president is going to decide what the president is going to decide. I mean, right?
Now we back up under 500.
Trying to reheat that conversation.
We're back to selling off again, guys.
But that's Kevin Hassett saying,
back to the sell-off again.
That's not the president. Kevin Hassett saying the president's going to consider this pause. That's Hassett just punting on the question, basically, and moving forward. Because all the White House advisors are in a position here where they know what the
back to the sell-off.
They know the agenda here on tariffs and how important the tariffs are to the president. But they also know that there are giant
that was wild
on the whole system right now, and the president may change his mind at some point. Who knows in the future? So they don't want to.
So let's watch and see what's gonna happen.
Totally off the table.
Appreciate y'all for rocking with me.
That the president is
hope you learning something. on this day because it's really, really a wild day.
Eamon, thank you.
The stock market, bro, and all this is very interesting.
Just to wrap up with you, we didn't get to Tesla,
right?
Which you also obviously are concerned about for any number of reasons. Elon Musk,
but
more
man,
outspoken than any other CEO, although he really didn't say too much.
Everybody needs to learn this stock market game, bro.
Deeply so.
Everybody needs to learn this.
Manufacturing, how much they have to
right?
for,
I mean, it's amazing, bro.
Nature, but,
it takes a while to learn how to do it, but once you have that PIN code, you can basically get money out of thin air.
In terms of more and more, given the retaliatory that we see, you'll see more China domestic buy BYD, NIO, and others. And then you look at ultimately what this could do to their cost structure. And then my whole worry with Tesla is that this now is turned into a life of its own, and the tariffs
Let's see.
become a bigger.
What time is it? 9:40.
When you start to look at the China market and you look at everything.
9:40, guys.
And that's why this is really a perfect storm between the political brand tornado F5 that he's created, along with the political symbol, and now the tariffs. That's why it's a dark.
We're back up under that resistance of 500, 495.
Autonomous and robotics and the future. If it wasn't for that, we'd have to downgrade the stock.
The future of manufacturing, autonomous and robotics. Yeah. Okay, thank you, Dan. Dan Ives, for being with us as we watch this breaking news. Look, the Dow is now heading south again. We're down 923 points. It briefly went into positive territory. It was recovering before this sort of erroneous headline on the wires that Kevin Hassett said the president is considering a 90-day pause. Our Eamon Javers just reporting the White House called it fake news. And guess what? We sell off again. NASDAQ down 1.8%. Let's bring in Steve Leisman, who's got additional color as economists increasingly, Steve, are moving into the recession camp.
There we go. Back going down.
And it feels like they're lasting now. The White House is not giving any indication that they're ready to negotiate any sort of off-ramp.
Yeah, and I think, Sarah, I've tracked down the source of this, as the White House calls it, fake news headline. There was an interview with Kevin Hassett this morning with Fox News. He was asked about a 90-day pause. And, guys, I think we have a full screen here. If not, I will read it to you. The question is, will you do a 90-day pause? Would you consider that? And Hassett's answer, I think the president's going to decide what the president is going to decide.
Hold on, I got to use the restroom, guys.
I don't know if there was some other source of that. That was the source of it. Certainly, if Fox News thought it had some kind of scoop, it didn't know it because it wasn't on Fox News' website. It wasn't in any of their socials. That seems to be the source of it. So Hassett is not saying any of that. And he goes on to talk about the idea that there's lots of negotiations going on. But as you pointed out, Sarah, yesterday his top lieutenants, Bessent and Hassett, along with Lutnick, came out, said there's really no movement at all. This morning, Navarro on our air, no movement at all. And now this 90-day pause thing, at least if it's some other source, I don't know. But if it's this source, there is no comment on a 90-day pause. And you're right, Sarah, guys, just one full screen I'd like to put up from what I had already originally planned to do, which was, this is a flash Fed survey we did. It shows that 56% of our respondents believe, or the 56% probability or average probability of a recession. That 33-point jump since January is the largest we have ever recorded in the many years we've been doing this. And there's the Fed's dilemma, Sarah, you know it. The outlook for GDP down 1.7, the outlook for CPI up about a percentage point. The Fed is just not going to be happy with that. And I think there's a good discussion to be had, Sarah, as to the extent to which a rate cut or two would help. And then the concern is, would it hurt? And Powell was very clear that they have an obligation at the Fed to make sure that initial or primary inflationary impacts of tariffs do not become secondary, even while the market is out there betting on 4 rate cuts. I think it might be aggressive.
Yeah, market telling you that the growth worries outweigh the inflation worries at the moment. And I did think it was interesting how Powell answered that on Friday, where he said, look, if we have, he really spoke to this, dueling parts of the mandate. In other words, high inflation away from the target and lower growth or unemployment away from the target, how would we respond? We would look at which one is farther away from the target. And I wonder what you make of that, especially because unemployment tends to be a little bit lagging.
Right. So you're right. And it's actually even a little bit more complicated than that from the Fed's point of view in the following way. First of all, you're absolutely right. And the Fed goes back to its statement of principles when it has this dilemma. But the other aspect to it is the outlook for it. It's not just the existing data. So let's say you're in a position where they're both, one is further than the other. What's the outlook for both? So the Fed is going to have to rely on the existing data, which, as you say, the employment data can be lagged, but then also the outlook for both, and decide that, hey, over time, it's going to take longer, for example, for the jobs numbers to come back to our mandate than it is the inflation number, and they would side on it. But I think the issue, Sarah, there was one other thing that the chair said, which she said, inflation in coming quarters. That spoke to me of, I don't know, he's looking at 6 months of lousy inflation data if you take it literally. So then you have to ask yourself the question, when does the Fed feel like there's an all clear to cut rates because it feels confident about the inflation outlook? The market's looking for rate cuts as soon as June. I think June is further than 6 months away.
The other thing, Steve, I wanted to get you on was your post over the weekend speaking of employment and manufacturing, is the number of manufacturing jobs that we might be poised to lose in the event of a recession, even though this entire policy is all about bringing manufacturing back.
Yeah, I'm sorry, I didn't have the chart available. What I did, Carl, was I looked at the manufacturing job loss after the last 5 recessions. It averages about 10% year on year, whereas the rest of the private sector, minus manufacturing,
back above that old resistance line again.
3 times as many jobs lost.
Trying to get back up to 500.
Recession. What does that mean? It means that if we have a recession, and that's not a foregone conclusion, it's the odds.
Appreciate y'all for hitting that like button.
If we have a recession, you could lose 1.2 million manufacturing jobs on average, and just 500,000 if it's a moderate recession for a moderate manufacturing job loss. I know we have to go, but it would be it's the definition of cutting off your nose to spite your face.
Got to make that back support.
Steve, thank you. Steve Leisman.
Think I'm gonna move
take
support.
A break here, take a look at some. Give us an intraday of S&P
right
or
here.
NASDAQ or Dow. You'll see a giant peak in the middle of this morning session. You call it Mount Hassett, although we now know from the White House that this was not a discussion about pausing tariffs for 90 days, except for China. VIX pretty much unchanged from prior to that headline, around 50. Stay with us.
We got
30 seconds brand outdoor.
We up to the VWAP, the resistance line.
No time. Well, the acorns
is also the VWAP.
It's gonna take them all day to clean up that mess.
Trying to see if we're gonna get above this VWAP area.
So, its powerful formula quickly cuts through dirt and
Can we get above that VWAP area?
Dead clean. And versatile enough to clean decks, fences, siding, stucco, brick, furniture, and more. 30 seconds brand outdoor cleaner. Always away.
As we come up on 10 a.m., guys.
The NBC News mobile app. Get connected to your favorite news shows. For the top stories, breaking news, and live video, download the NBC
Right, we're
News
above that
mobile
VWAP
app now.
for another push.
Everyone's talking about the new voice coaches. Even the new voice coaches.
Adam is funny, smart, and you see that gorgeous face of his? He's got moves like Jagger.
I respect my elders.
I'm very young and hip.
You are, John. You are young and hip.
Yo quiero voz en mi equipo. I knew he was going to speak in Spanish.
Shut them off. But I'm here to put these boys in their place.
Adam's a big night. So I guess that's how it's going to be.
I rest my case.
The Voice, News Monday on NBC and Peacock. Listen to full episodes of Meet the Press wherever you get your podcasts.
News for the generation of now is NBC News Now.
Experience the power of CNBC Pro. Track your portfolio from every angle on one optimized platform. Never miss a moment with exclusive access to market-moving interviews and stock picks. Essential investing tools for wealth management. Plus, CNBC Global Market News and analysis tailored to your holdings. Become a smarter investor with the power of CNBC Pro. Go to cnbc.com/getpro now.
Just want to take note of what's happening in the bond market, because what we had been seeing as a result of stock selling off and the worries about all the tariffs, recessionary worries, is buying bonds with yields heading south. Well, that reversed even before all the Kevin Hassett rumor drama, non-headline, that the White House shot down about consideration of a 90-day pause on these tariff rates. We are seeing these higher Treasury yields. It's just something to pay attention to, David, because, it made sense to buy treasuries if you're worried about recession, but if you're worried about something bigger with U.S. assets, if you're worried about the deficit, for that matter, that part of the White House strategy has been we're trying to cut the deficit and government spending. Well, guess what happens during recession? Tax receipts fall.
They do.
And deficit gets higher.
Capital gains certainly going to fall already. So, yeah.
Yeah, job losses. So just something to be aware of, because when you worry about debt problems or credibility issues, if part of the aim of the administration was to lower interest rates so that they can refinance the debt at lower rates, pay lower interest costs. Remember, this has been the whole Secretary Bessent idea of things. He would like to see those rates go down. They're moving higher. It's just a move here. Maybe it's a reversal of just overbuying of treasuries now. I don't want to make too much of it.
Move in a short amount of time.
But just something to watch as we move forward here. Also, as we contemplate whether or not the Fed is going to step in with some rate cuts. Our next guest penning an op-ed today on that topic in the Financial Times, saying the Fed shouldn't try to save the world from Trump tariffs. Rashir Sharma, Rockefeller International Chairman, joins us now. Rashir, it's great to have you. I feel like that was the message that we got from Fed Chair Powell on Friday, which is sort of like, not much I can do about it here because this risks igniting inflation, even if there are growth worries.
Yeah, I think that he's changed his tone a bit, because in the couple of weeks ago after the Fed meeting, he was tempted to use the word transitory again. But I think that he sort of walked back on that. But the market doesn't believe him. The market thinks that he's going to capitulate soon enough, because that's been the Fed's track record for the last couple of decades. That at the first sign of economic trouble, they tend to capitulate. They did that last September, and even before that with SVB. But there's a long history of the Fed having capitulated, and the fact that the Fed has missed its inflation target now for 5 years in a row and will do so for another 2 years. So I'm really surprised in a way as to where the market is pricing in these rate cuts, but also sort of understand it, because that's been the Fed's track record going back the last few years, if not decades.
Right. So now we have the situation where the Fed is a little bit handicapped. We have global, you're a very global guy. So let's just talk about what's happening overseas. Hong Kong falling 13% overnight. It's the worst day since the Asian financial crisis. What's going to happen to global growth?
No, obviously, global growth is going to take a hit. But I think that at the end of what's going on here, and something we've spoken about as well, is that the rest of the world is laser focused
up
now
here at resistance right now.
America. So what's happening there is that they are sort of expediting their trade deals of trading with each other, as I've sort of written in the past as well.
Hope y'all having a great day so far, a great morning. I'm having a great weekend and a great day. I will be going live at that Final Four. If you don't know, I'm at the Final Four right now as we speak. And my team, which is U of H Houston Cougars, is in that final championship game. Go Cougs!
The U.S. market is really underperformed.
And
and the
I will
dollar,
be
in fact,
there
has
live
gained
later.
so these are already two very different reaction functions to what we've seen in the past. And you just pointed out the treasury yields as well. I think that's a great point you made, because the sensitivity analysis that we had done some time back showed that if there is a
We'll
US
be live
recession,
there later.
the deficit will widen to 8 to 9% of GDP.
We're coming up on 10
what sort of
a.m. right
yields
now.
should that bring about? Higher yields, I would imagine, not lower yields. So this is a very different environment, and looking at history here may be quite misleading, as we're already seeing in the market's reactions.
Rashir, I'm interested in, somehow we're going to hopefully get some resolution, quote unquote.
Let's look at some of these other
tariff
companies.
rates are and what negotiations look like. But I am curious to know your thoughts about the scarring.
NVIDIA and SPY looks the
to
same.
the U.S. and what that does to its
Well, with
ability
Tesla.
to draw capital from around the world.
All these companies looking the
I
same.
think it's very significant, partly because, Carl, we went into this with the U.S. being
That's
the
wild.
most overhyped, overowned, and overvalued market.
Even Bitcoin look like the rest of the market.
That never before had so much capital flow to the U.S.
All these companies look the same, guys.
Flows into the stock market globally went into just the U.S. market this decade. So there's a lot of unwind
Except
of that
Dollar
which has
General.
happened, and a lot of the capital came in unhedged, expecting the dollar to appreciate. So that's why, that was something that we discussed was the mother of all bubbles, and that bubble is now being pricked. But this credibility damage is going to last, and I suspect that over the next few years, the U.S. stock market and U.S. assets are going to underperform, no matter how this tariff drama is resolved.
Rashir, thank you very much for weighing in. I will note that, Carl, even though we have seen stocks sell off again after
we're right back at resistance again, guys.
Asset headline. They're not at the lows. They're certainly, it's not as bad as it had looked. The
Right at
Dow's only
resistance
down 350
again.
points. So, there's something there.
That's up.
And even heading into that headline, we were off the lows. Treasury yields have turned around. Like there's definitely something happening, whether it's just it got overdone or what.
Yeah,
Appreciate y'all for joining me. I'm live from the Final Four.
What's happening is
live from the Final Four.
Okay, and that's the good thing. And I think, well, the market may move on.
We broke resistance, hit it on up.
There is some vague hope that the Europeans might be offering to negotiate somehow. I
506,
think that's what the market's clinging to right now. That's the vague hope here, and why we stopped going down.
Can we break it and move on up?
You guys have been talking about strategists reducing estimates. These are the bottoms, not the bottoms up numbers. And
the S&P 500 is now green.
Rather dramatically in the first quarter. I look at some of these material
Tesla is
stocks,
red, but we're waiting to see if it's going to move on up.
Core, Dow, these numbers are getting cut dramatically in the last few weeks, and you can see look what happened to Freeport over here. Freeport, 42 to 30 in the last couple of weeks, and the estimates have been dramatically
Can we get back
on higher costs?
up here?
Nucor went from 123 to 105. It's way down the last few weeks. So the material estimates
5, 12, 18.
This is one sector where there's really material movement.
5, 16.
The bottoms up strategist move. There's Nucor. It was 123 just a few
days
ago.
Is it possible that we're going to make a
Now
big
it's
U-shape?
If you look at other sectors like consumer discretionary, again, I look at
Come on
analysts,
up.
not so much strategists. These are the bottoms up people.
Got to be careful though, guys.
In the market, you
got to be paying attention to what's going on.
Absolutely, the estimates are collapsing on Ford.
And you got to take profits when you got them.
For the first quarter,
because ain't no telling what might be. They can say and tweet anything.
Dramatically lower. It's like that's like close to a 4-year low on Ford. We're not that far away.
What a great day
in the consumer discretionary place. Caesars has been down.
What a great day in the stock market, man.
All of these have had their
Go Cool
cut rather dramatically.
Yes, I'm out here at the Final Four.
Already happening in the market, and
it's been a great weekend so far. Good games on Saturday. Shout out to San Antonio, man. This is really a nice, beautiful place.
20% decline.
Nice, beautiful place.
I just want to show
I might,
number here.
You know what?
The high that we hit.
I got to see how far the Riverwalk is.
February 19th high
from the Alamo Dome.
This is the closing high. This is how S&P Dow Jones does this. So to get 20% below that, we must.
So when I get down there, I'm gonna see if
magic number. And
the Riverwalk is walking distance from the Alamo Dome.
Not intraday that actually matter in the long run.
Matter of fact, I'm gonna look that up right now.
We need to close at 49.15.32. Obviously, we're a little bit above that, but this morning we were essentially sitting right in that particular
How far is the Alamo Dome from the Riverwalk? Oh, it's right there. Okay. That's great. Right around the corner. All right. How far is the Alamo Dome from the Alamo?
The drive from the Alamo to Alamo Dome is 1.5 miles.
Their neighborhood. So there's
Okay, walking distance.
20%. We're essentially sitting there and hopes, maybe some vague hopes, on not a lot, that maybe the Europeans will.
All right, guys.
One thing that I think is so stunning is how wrong
So
the macro.
I'm not gonna drive today because I'm trying to have some fun tonight. So I'm gonna catch an Uber down there. I ain't driving, and plus they'll charge. It's cheaper to catch an Uber. Shout out to Uber.
Well, we've talked for years how bad forecasting is with strategists and analysts.
Yeah, it's cheaper to catch an Uber.
I wouldn't hold them against
I'm just waiting till I get a wait and save.
It's just causing a lot of pain.
Speaking of pain, though, we are, as Sarah's mentioned, well off the lows. In fact, we're up.
I'm gonna leave when these rides go down to $10. Then that's when I'm gonna leave. Right now, to catch an Uber from here to the Alamo Dome, it's $13. So I'm gonna wait. Yeah, I'm gonna wait for it to go down to around 10. That's when I'm leaving. If it go down to 10. Or if it goes up, because you know it could go up too as we get closer to game time. So I hopefully around noon, around lunchtime, these prices will go down.
From the ashes. Yeah, we are the new kid on the block. 35 years ago, the wall came down and we had to start from scratch. We found out, who are we? The answer by our international visitors is, you are the city of freedom. Berlin is adrenaline, and at the same time, it's chill out. If your feet are
So
tired,
I'm just waiting.
if your mind is tired of so many museums, impressions, then you can make a turn and you are in Tiergarten.
Because if I go down there and park, they charging like $55
If you look at the Mediterranean,
for 4 hours.
many of the destinations become too hot in summertime, and we say,
So if I go down there for 6 hours,
we have cool forest, cool lakes,
that's almost,
whatever you need, and a very cool nightlife as well, as everybody knows.
that's gonna be like $75. So I might as well just pay the yeah. Hopefully they go down to 13. Let me go down to 10. It's $14 right now. If it go down to $10, I'm gonna head out. I'm gonna go to the Riverwalk. I'm gonna go to the Alamo because that's all right by the Alamo Dome. So that give us the time to, go, because I'm going live when I get down there, guys. When I get down there to the Alamo Dome, where the Final Four championship game is tonight, I am in the building. Go Cool. So when I get down there, we going live. Y'all come on in and kick it with me, man, so y'all can see what it looks like down there near the Final Four. I'm gonna go to the Riverwalk. I'm gonna go to the Alamo, and then we're gonna go to Fan Experience, hang out there until 6 or 7 o'clock, and then we're gonna head into the stadium. But of course, once I get to the stadium, I gotta end the live. But we're gonna hang out today, guys. I'm gonna take my charger with me too. We're gonna get some content today. Just like we got all that content at the Super Bowl, we're gonna get content today at the Final Four championship game. And Houston is in that championship game. Go Cool! Go Cool! We ready to rock and roll. Go Cool! We ready to rock and roll.
March of 2020, we started with a big sell-off that sent the S&P into bear market territory.
We had a great day in the stock market too.
The president was considering
it's going down.
Tariffs for all countries except China. White House now calling that fake news, but as we pointed out, haven't revisited the lows of the session. Dow's down 230.
Appreciate y'all for rocking with me, man.
It shows you a few things. One,
Appreciate
there's
it.
a lot of damage done. Two,
As we go, what? We moved above resistance.
Off-ramp or signal that the president is open
And let's
to
see.
negotiating or pausing.
Let me make a trend line.
Shot that down this morning.
Because we are building
Shot that down last night. And even in
high lows at this moment.
Plunge and all the recession forecasts going up, the president said we need to take our medicine. So not only
we are building high lows,
but actually digging in on this tariff policy. Let's get straight to Eamon Jabbers at the White House for the latest on what we are actually hearing, Eamon.
We are building high lows.
Important to separate what we're actually hearing from real sources from Twitter nonsense. But look, here's what we can say.
Can we make this U-shape
He's the
on
National
up?
Economic Council director. Earlier today, the anchor person on Fox.
Can we make this U-shape all the way on up?
Consider a 90-day pause.
That's what we're trying to see right now.
Hassett replied. We have the text here to show the exact answer of what he said. He said, "I think that the president is going to decide what the president is going to decide." So. That's not
I did have a few people here. They left. I guess they're not rolling with the Houston Cougars. That's fine.
Why didn't he have the
I understand.
Because the president, as you've said, Sarah, has been suggesting he's not backing down. He's doubling down all throughout the past 24 and 48 hours. But there's always the possibility with this president.
All right.
At a moment's notice. And so Hassett had to leave open some kind of possibility rhetorically that might happen. So he said the president's going to decide what the president's going to decide. That is a much, much different thing than saying that the president will consider or is considering a 90-day pause. And that's why when we were able to go into the West Wing, talk to officials here, Caroline Levitt called me to say that any reporting that there is a 90-day pause under consideration is, quote, fake news, unquote. The White House wants to make it very clear now that the president is not considering a pause. He is full steam ahead on his tariff agenda, guys.
You know, this has been a president that listens to business and engages with business and talks to business, which is all a good thing, you know, going in. Over the weekend, I know he was at the Live Golf tournament, but what sort of communication did he receive from people that he trusts? And is there any sign that he's listening to them? Because I can't imagine anyone in the world of business or investing is on board with this.
Yeah, that's a really good question, Sarah. And my sense is that he did talk to some people in the business community and on Wall Street over the weekend, but I don't know who he spoke with. And I'm trying to get a list here of some of the prominent people that the president was on the phone with over the weekend. We just don't know as of right now. And we also don't know the identities of the 50 countries that the White House says have called looking to have some kind of negotiation here. We don't know which countries are involved in those negotiations to the extent, or requesting a negotiation to the extent that any of them are. We just know that the White House has said that they are. So who is he talking to? Which heads of state is he hearing from? We don't have any of that information. We will see the president later today with Bibi Netanyahu in the Oval Office and at a joint press conference, which I'll be at later this afternoon. So we will have an opportunity, I think, for reporters to get questions to the president, for him to comment on this directly himself. And that's the best indicator, what the president says in his mood.
Yeah. And the reason I keep bringing up Israel as an example is because it'll be interesting to see if they can make a deal. Because Israel is an example where it's our friend, our ally. We put 17% tariffs on them. They came back and they said no tariff barriers from Israel to the United States. So if there is a negotiation to be had, you would think it would be with a country that is willing to take away all of the trade barriers. So that could be the litmus test.
Israel said zero tariffs before the president put the tariffs on, and the president put the tariffs on them anyway, right? So what you heard Peter Navarro say on CNBC this morning is it's not just, in his view, about getting down to zero tariffs. It's about going below that, because this White House sees what they call non-tariff barriers, everything from a VAT tax to dumping to any kind of currency manipulation. They see all of that as part of an aggressive trade war. So what they want from countries is not only to go to zero, but to eliminate all these other things as well. Is that possible politically, economically? Your guess is as good as mine, but it's certainly not possible anytime soon.
Well, it'll be interesting to see if he can do it with Bibi, because that's, they have a good relationship. They've negotiated before. I wonder if he can do that. That would be a good test to see if he can do it with others. Thank you, Eamon.
Yeah, we'll
Keep us posted. It's fast moving coming out from the White House and moving the markets here. With the NASDAQ still positive, let's turn back to the markets and all this volatility. CNBC senior markets commentator Mike Santoli, we sort of rallied into that erroneous headline and have maintained some of the gains here. What does that tell you?
Well, it tells you what the initial conditions were to some degree. Mega oversold, highly torqued market. Any spark is going to cause something to move fast in a short period of time. So we knew that coming in, and we did do some work overnight with the futures, hitting some levels that may or may not prove consequential, but they seem to be kind of widely watched, which would be, basically giving up half of the entire bull market from the October 2022 low. It's also equivalent roughly to the high in January of 2022 before we had that cyclical bear market. So it felt as if you had the setup there, and everybody recognizes that you have this embedded option in the market, which is, as you say, any hint of de-escalation. It's basically like March, April 2020. If there was a day that came out and you saw caseloads going down and you saw the second derivative of the new COVID cases going down, the market would rip because everybody is in risk management mode in two directions. And so I think the rally on what seems like an erroneous headline basically told everybody, let's not lean against this too much in the very short term, because that's what can happen to you. A 50 VIX, where we are right now, means statistically a 3% daily move in the S&P 500 for the next 30 days. That's not hopefully going to happen. So it's really hard to stop yourself. Hey, look, anything can happen. We are at these rare extremes right now, as you've been talking about, right? One of the biggest two-day drops, all of the things you can look at in terms of how much capitulative looking selling has happened is there. Now, the problem is you want the moment when almost it doesn't matter what the news is and the market can maybe find its footing, because nobody can see how this is going to play out. And so when you have that much of a wide band around the probabilities, it's much more about reading the tape, exhausting the selling, seeing if there's another leg down. Right. You and I were talking this morning about this 50% roughly retracement of the bull market. 48.50-ish. Which we really weren't that far away from this morning. Overnight futures, no, we got there, more or less, a little bit above that. I mean, the one thing I am mindful of is, I was saying this in recent weeks, every time we got to kind of a plausible point where you're like, oh, that should be a buy, down 10%, VIX goes almost to 30, let's buy it. Wasn't high enough. VIX goes to 40 last week. Not quite enough. And so I think you could arguably say maybe that's another level that we might have to test a couple of times and figure this out. Look, we haven't built some kind of fundamental margin of safety here. We're still working off of pretty stale earnings expectations, and we don't know what the economy is going to do. And I think we'll be lucky if all we're doing is sitting here arguing about recession probabilities.
But diving in a little deeper, okay, I can understand why the retailers got sold. That's just pure tariff exposure, right? You can understand why the recession indicators got sold a little bit, like the materials and the industrials, because the economic outlook completely changes. But I've been watching financials really carefully, because when you look at financials, they're fairly insulated from direct tariff pressure, right? I mean, global flows, not great. Recession, not good as well. But the fact that they have been very hard hit and continue to be one of the worst performers in the market, I mean, that is unloading of exposure of U.S. stocks that were thought to benefit in a Trump presidency. Deregulation is great in an expanding economy, but deregulation when nobody wants to take loans out doesn't really work.
Inflation doesn't help anybody, and credit losses piling up, and all the rest of it, unemployment going up. I mean, none of it's going to work for banks. I also think that I was saying this last week. That was the last note of really complacent, long, kind of policy influenced holdings. Now I could squint, and I said this on Friday too. Look, the Russell 2000 outperformed on Friday. You had a lot of the stuff that really was the first into the bear phase that actually firmed up a little bit. In other words, it's moving on to the stuff that people didn't want to sell. It's more liquidation mode. I do think you could also look at gold doing that. I mean, gold's been down a couple of days. People are selling bonds. You remind me of what Cashin would probably say if he were here, and that is you move to a period where you sell what you have to. That's kind of where it is. Yes, exactly. And so that's why you look at the stuff that was first hit and see if you see signs of life, and maybe that's a positive divergence. But look, we're arguing about really small stuff around the margins here. The big deal is this economy going to hang in there or not? Are we deciding to just have a recession? That's the big question. Mike, stay close. Mike Santoli. Let's stick with the markets. Bank of America, Oppenheimer, Evercore have all lowered their S&P targets this morning. They are joining a growing number of voices on the street reacting to the tariffs and the sell-off. Let's bring in HSBC Chief Multi-Asset Strategist Max Kepner. Max, it's great to have you back. I had to chuckle at this line. I think it's yours. Our usual 6-month tactical horizon has literally been shortened to a few days now.
Yeah, it is. Unfortunately, I think it's only Monday afternoon, but it feels like a Friday evening already in terms of the market action. I think just 10 minutes ago we would have probably talked about a bounce in the S&P, and as far as I'm correct, I think we're almost down 1% now. Look, I do think market conditions really are oversold now. To Mike's point, a lot of our indicators, a lot of our shorter-term indicators are really stretched on the downside. A lot of our trend-following indicators are almost max short on equities. Clearly, Thursday and Friday last week has brought market breadth almost to extremes where we were last in June and August 2022. So a lot of the shorter-term indicators really are a bit stretched. What's missing is the fundamental picture, right? This is something that can drive a technical bounce. It can drive a sort of 4-5% up very viciously, very violently. But to us, what's really missing is the fundamental sort of underpinning. Is this really the time where you absolutely want to call the bottom? And I don't think this is it. Absolutely not. I think you should really use those bounces, which I think we can see in the next few days, really use those bounces to de-risk even more. Because quite frankly, the policy narrative, volatility, it's going to be here, right? It's here to stay. I don't know. Even if we get a 90-day extension, imagine from just a couple of minutes ago, even if we were to get that 90-day extension, is that really positive? Fine, we get an initial rip. But if you're a CFO, if you're a CEO, are you suddenly going to turn around and saying, oh, of course, now I'm going to drive up my capex? No, right. You've just got another deadline and another deadline of uncertainty.
Yeah,
so that uncertainty is just going to linger.
Right. What does it get you, even if it's a 90-day pause? But you're not willing yet then to pull the trigger on a recession call.
No, I think. Look, I don't think it matters too much if we call the recession or not. To me, what matters much more is where or at what point are we pricing in that recession. If it comes or not, I'm not necessarily bothered really. What I'm bothered about is when I look at cyclicals versus defensives globally and in the US, they are not pricing those recession odds just quite yet. Where I could be saying, look, if there is no recession, it's definitely the bottom. And even if there is a recession, we're now pricing it. That is really what matters to me. That's the one point where I would say, okay, now we could call it, now we could call that a bottom. And we're not quite yet. When we look, for example, at forecast revision momentum, so we sort of track top-down forecast revision momentum and look at that against equities versus rates or things like cyclicals versus defensives in equities. You look at equities, cyclicals over defensives still have an 8 percentage point gap between that top-down
that drop below
so
this
really is still quite a bit of a
support line
to be undone and unwound by cyclicals.
There you go.
Despite Thursday and Friday's meltdown, I think equities
481.80.
The equal weighted S&P, the average stock by Wednesday last week was almost flat year to date. So we're literally only talking about a 2-day sell-off of the sort of broader market.
It's a long way to go to get back down here to 480.
To really say, right, the recession is now fully priced in.
Yeah, although no ordinary 2-day sell-off. But Max, my question to you is on the rest of the world. So we've seen really sharp declines across Asia and Europe right now. Another day where the DAX is down 3%, Spain's down 4%. I've heard two arguments here. Number one, buy the weakness in Europe because they actually want to stimulate their economies and fight this and trade with other nations more freely. Or there's the view that they're just going to get hit a lot worse than the U.S. no matter what happens. What do you do?
No, I think I buy the rest of the world over the US. So I would argue that actually the US is going to be, at least in the near term, the ones that are harder hit, simply because what we've seen now in the last few weeks is really a confidence and a sentiment shock that has been really put on the US economy. And modeling those confidence and those sentiment shocks is just impossible. We know that is the point where growth basically stops being linear and where it starts getting non-linear. We don't know how bad it could be. Linear, if we just model it with linear numbers, just with put a linear regression line over a couple of scatter plots in Excel, fine. Then that gives you actually not that much of a negative impact for US growth. Absolutely fine. But if you now look at the confidence, the sentiment shock that we've seen over the last 2 months, and that uncertainty shock, it's impossible to model, and it's it's biggest in the US. It's actually not as big, I would say, in Europe, and in particular in Asia. I think some of the moves from this morning are really overdone. When I look at Chinese equities, I look at the headlines out of China, where they want to stimulate the consumer a bit more, where really also the comparables with last year on inflation and the top-down macro data are a lot easier. I would much rather be then in consumer stocks and consumer cyclicals in China, where we do see the stimulus, where the comparisons with last year are much easier, rather than in US consumer cyclicals that are now getting hit on the demand side, perhaps with activity data slowing down, and on the supply side with tariffs coming in.
Right.
180.
It's a tough one. Max, thank you. We'll talk soon, I hope. Really good analysis of where we are, at least in this quarter hour. Max Kepner, HSBC.
Wasn't that long ago everyone bet on the U.S. consumer and against the Chinese consumer.
I'm way ahead of schedule on my water.
Box CEO Aaron
According
Levy is with us
to this.
for more on the tech sell-off and the impact of tariffs, why he thinks CEOs
I'm
are
supposed to
remaining
be here by 1 o'clock.
and why he's speaking out. We're back.
Bro, I'm already down here.
Bravo's hit series, The Valley, is full of surprises. The sun's out.
Never knows how small
I'll be drinking some water, y'all.
You're exhausting. You give hearing any
I'm way ahead of schedule.
So catch up with friends.
I'm a great father. Terrible.
According to that
As
measurement.
suburbia turns scandalous.
I just want you to be there for me. That's all I want, Kristen.
Is there any rumors of him cheating?
You need to go get help.
Nobody wins in these situations. Nobody wins. I think the apocalypse is here.
The new season of The Valley premieres April 15th.
We at $12. I'm waiting for the Uber rides to get down to 10. Then I'm out of here.
News and live video. Download the NBC News mobile app now.
Top story live from the Pacific Palisades, live in Tel Aviv.
I'm waiting for it to get right at 10 or 15. Because I know if it get at $15 by 12 or 1 o'clock, then it's going to go up even further the closer we get to that game. That's why I'm not even tripping about going out there early. Because like I said, we're going to go to the Alamo and to the Riverwalk, which is right around the corner. Y'all hold up. I got to use the restroom.
So we have been here for the last 90 years. And because of that, it's so important. We have a long-term brand building goal and agenda. Short-term marketing effort, short-term KPI is critical because these are the building blocks. By validating a lot of the activities, through engaging our customers, through discussing with them their needs, understanding what we want to do, eventually we add them together. That is our long-term brand strategy. Banking is a people business, and that's why we need to enable and trust our team, our teammates to work, so that they know very clear strategic direction from the head office, from the seniors, and we lead by example.
What I'm looking at, a morning meeting, a home stretch, individual stories about your stocks, wrap-ups. It's all for club members.
It's much more interactive with Jim on a daily basis, so I'm able to stay on top of things and actually have gained so much knowledge.
I watch the morning meeting just about every day. It really kicks off the day, provides a good framework on what he thinks is going on for today.
Go cool.
Join the club today. Go to cnbc.com/join Jim.
Getting some additional breaking news out of D.C. Let's get back to Megan Casella. Megan?
Hey, Carl, we're just hearing from the president on Truth Social vowing to significantly escalate tariffs against China due to the retaliation that Beijing is vowing to impose later this week. So just a reminder of the timeline here. On Wednesday, the country-specific tariffs as high as 54% against China are set to kick in. On Thursday is when China's 34% retaliatory tariff is set to take effect. The president is saying now that if that retaliation takes effect, that he would go forward and impose an additional 50% tariff on China, also effective on Thursday. So if we add those up, it was 20% fentanyl tariffs, 34% so-called reciprocal tariffs, now an additional 50% on China if they move forward with their retaliation, over 100% then for this term alone that the president would be imposing in tariffs against imports from China. He also says that all talks with China concerning their requested meetings with the U.S. will be terminated. So not willing to negotiate at this point. He says that he
Wow,
wants
what
to
news?
retaliate against these tariffs, and because China is taking these
More tariffs, guys.
that he would up the ante even further, as he did vow to do. It was written right.
Trump say he upping it. An extra 50% tariff on China.
On China of 50% effective on Thursday. Carl.
Megan, kind of reminds me of what Bill Ackman wrote a few days ago now, and that is sometimes it's a fierce negotiating strategy to have your opponent think you're absolutely crazy.
He did write that, and maybe that's what this White House is thinking, or maybe, as we were talking a little bit about last hour, this is something the president deeply believes in. He really thinks that, especially when it comes to China, that the trade deficit is damaging to the U.S. It's about a $300 billion annual deficit these days between the U.S. and China. The president said last night that he would not strike any sort of deal with Beijing unless and until that deficit was erased, which is not something that's set to happen anytime soon. 104% tariffs maybe would start erasing the deficit, but maybe because there would just be almost no trade left between the countries, we would have to see exactly what the impact would be. Clearly escalating things here to a point that seems deeply unsustainable, deeply shaking up the economy, I would say reconfiguring global trade as well. So a lot of time left between now and Thursday, but that's what he's vowing at this point would happen.
And if you're a retailer or any company that sources your materials that you sell to American consumers, American companies, Walmart, Nike, in China, you're looking at the prospect of 104% tariffs that you have to pay on bringing those goods to U.S. consumers?
Absolutely, 104% tariffs just so far this term. That comes on top of any tariffs that were already in place, because there were some tariffs in place with most countries, and the tariffs that President Trump imposed in his first term. These are all just adding on top of each other. And what we hear time and again from major corporations is that even if they try oftentimes to source from other places, they just cannot find other sources. The Chinese manufacturing is so far advanced in certain things like toys, car seats, strollers are some that we hear about the most, that there just aren't substitutions. So, and certainly aren't substitutions that anybody could find between now and Thursday. So either you're looking at the prospect of paying this tariff and passing it on to your consumer, trying to eat it yourself, but there's not a lot that these companies at this point can do.
All right, Megan, thank you. Let's see if China responds now. I guess they had, 24 hours. Megan Casella in Washington. We'll turn to the corporate response. CEO and business leaders are starting to speak out as the tariffs spurred big market volatility. JP Morgan Chase CEO, for instance, Jamie Dimon, saying the tariffs will slow growth. In his shareholder letter yesterday on X, investor Bill Ackman calling for the president to take that 90-day pause on tariffs. The White House just called fake news. In a rare social media post, billionaire Stanley Druckenmiller saying he does not support tariffs above 10%. Our next guest speaking out as well, saying tariffs make U.S. companies and markets less competitive. With us here at Post 9 is Box co-founder and CEO Aaron Levy. Welcome.
Thank you. Good to be here.
We actually haven't spoken to that many CEOs since this was announced.
Yeah.
Because I think it's they have to figure out what the heck it means for their business, and they don't want to get in trouble speaking out against the president. What are you hearing in your conversations?
Yeah, I think first of all, nobody's happy about the situation. I think when you imagine running a large company, any kind of Fortune 500 company, you need an incredible amount of stability and clarity to be able to make both near, medium, and long-term decisions around your supply chains, around where you're going to be investing, around hiring, around what markets you're entering. And the chaos that we're seeing is absolutely, destabilizing to a lot of those decisions. And the challenge is that you have a scenario where if the tariffs go through, you're going to see price increases that would actually, create a demand shock that has ripple effects. If the tariffs don't go through, then you have a dynamic where
CEOs, CFOs don't really know what to trust in a lot of these negotiation policies. And you have to make long-term decisions right now around where you're going to invest. So there's no great outcome from this situation. I think most folks just want to end quickly, get to some stable outcome. Obviously, with most folks not wanting the tariffs that we're seeing.
You are a good barometer of enterprise sentiment, right? They have to spend on your product. Are you already seeing it have an impact? And what do you expect there?
Not on the spend side, but I do have conversations with CEOs across a variety of sectors, and unfortunately, there's a little bit of a dynamic where some of the things that probably Trump is hearing from the business community is different from what the business community is talking about. As you mentioned at the beginning, you do have to negotiate through this, working with the government, and so there's some degree of reservation of really calling out all of the issues today with Jamie Dimon. What he called out, I think, was a kind of a rare and needed message for the administration. But I would say that the back channel conversations right now are very different from probably the ones that he's getting access to.
Do you think the Dimon letter gives corporates cover?
I think so.
You do.
It's a start.
Do you expect to start hearing that?
I think that's a start. What's interesting is that I think the administration has individuals that are tapped into these types of conversations. So I'd expect that they're hearing similar things. But unfortunately, I think there's some degree of filtering that probably happens by the time it gets to Trump himself. There's not a CEO that at least I talk with that doesn't want more manufacturing in the U.S., a greater industrial economy in the U.S. The general tone, and I think what most folks would prefer, is that you lean into tax incentives, deregulation, workforce investment, investment in automation, and you sort of grow through that dynamic. Without adding new headwinds that cause friction to making business decisions. So everybody wants a strong, vibrant industrial economy in the U.S. It's good for business, it's good for consumer, it's good for jobs, it's good for the future health of our country. But you want to be able to do that with a level of finesse that allows businesses to make long-term decisions through this.
Isn't that kind of what we were doing? Inflation Reduction Act, CHIPS Act, industrial policy.
I think most of the way. Now, where Biden got it wrong was you should also drive more supply side input sort of price reduction. The way you do that is deregulation, incentives for people to be building, and you invest in automation.
Well, I think I'm ended right here, guys. Another great day of trading. On the day trade, 43%. 2 trades. I held a swing trade overnight from Thursday. That was 100%. That one trade that I held overnight from Thursday was a short. The first trade today, which was 14%, was on a short. The second trade, which was 29%, a home run, was on the call on the run up on the fake news that Donald Trump was going to cut tariffs on everybody except China. Actually, he's actually tweeted that he's going to put another 50% tariffs on China. So we had a great day today. Hopefully, U of H wins tonight. I'm about to get ready to head over to the championship game. I'm going to go to the Alamo Dome. I will be going live once I get to the fan experience. So with that being said, I love and I appreciate y'all. You have to learn this stock market game, guys. I challenge you to add another element to whatever you got going on, which is this stock market. Appreciate you for hitting the like button. So with that being said, guys, earn, spend less, and invest. Another great day in the stock market. Yes, you can make money if the stock market is going down. Yes, you can. Another great day for me today. So hopefully the Cougs win tonight. I will be going live from the fan fest. I will be going live from the game. NCAA Final Four championship game. My hometown university, University of Cougars, are in the championship game against the Florida Gators. And we looking to do what? Win that championship game and bring it back to H-Town. So with that being said, I love and I appreciate y'all. I will be back. Once I get over there, guys, I'm going live from the Alamo Dome. So with that being said, I love and I appreciate y'all. Earn, spend less, and invest. 704 Wall Street is my block. 704 Wall Street is my block. With that being said, this is the one and only Stock Sniper till the next one, which is gonna be when I make it to that Alamo Bowl, Alamo Dome. So with that being said, I'm out.
Well, it's really good of you to come on and talk.
Go Cool.
So this was scheduled before tariffs, and we were